Hello and welcome. I'm Suyash Maheshwari and you're watching Last Tick here on News9, where we break down the day's action on the last sheet. And it was a lackluster Tuesday for the Indian markets as Nifty ended marginally lower, snapping its 4-day winning run. The index, by the way, opened in the red today and tested 22,250 odd levels in the morning trade itself. Now, bulls did attempt to arrest this fall and they were partially successful. However, 22,400 is where we hit a brick wall on the upside and we ultimately settled below it. At close, Nifty was down 0.22%. At 22,356 mark. Now the index has formed a doji candlestick pattern on the daily price charts, which indicates indecisiveness among market participants. This, by the way, was the second consecutive doji formation. So the struggle between the bulls and the bears at record levels certainly seems to be picking up. But I think, if you look at the overall, the setup, it slightly favors the bears, and this was indicated also by the market breadth in the last two sessions. To simply put it, what I mean by the market breadth, more stocks have been declining than they have been advancing, and it was a case today as well, as you can see on your screen. Second, apart from the 2-3 sectors such as your banking and your auto pack, most sectors are witnessing profit taking, especially the IT and the FMCG counters. Now, the benchmark indices of both have also, if you see today, they corrected by 1 to 1.5%. And if you look at the support, it's primarily coming for the markets from the banking stocks. I think that is what's keeping the bull in place here. Nifty Bank that emerged as a big support for the market. It has been a big support for the market in the last 1 week, and what would perhaps favor or work in the favor of bulls is that Nifty Bank today was able to close above 47,500, and this was the first close above 47,500 for the index since mid-Jan. And time and again we have struggled around this zone, this 47,500 zone, and in fact if you look at the last time we were here, we corrected sharply. Nifty Bank gave up by around 1,700 points from there on, but we have finally managed to close above it, although still close about 150 to 200 points from the day's high. But all in all, the setup is looking rather positive for Bank Nifty. But with that, let's also welcome to the show Mr. Amit Gupta of Fintrek Capital. Alright, Amit is yet to join us. Let's also talk about some of the sectors today, because clearly Nifty Bank is what's providing the support to the markets at current point. That has been the index which has helped the bulls on the upside in the last 1 week or so. We are seeing some bit of a some bit of correction play out in the IT stocks. IT stocks today declined by about 1.6%, and this was on the back of CLSA downgrading some of the heavyweight stocks. And ever since that narrative of rate cuts in the US got pushed further back towards the fag end of 2024, I think they have the IT stocks have seen a sentimental sort of an impact, because a lot of the business for these large IT companies that comes from Europe and US markets. So a decline over there, and a decline in discretionary spending over there because the cost of capital is high, is bad news for Indian IT companies, and we are seeing that sentimental sort of a correction in the IT stocks as well. FMCG was another pack which suffered big cuts today, media being another one which ended with cuts of about 1.4%. But I'm made to believe Amit has finally joined us. Thank you for joining us on News9, Amit. Always a pleasure speaking with you. And I want to begin with the biggest news of today. After JP Morgan, Bloomberg has now decided to include Indian government bonds to the emerging market bond indices starting January 2025. Now, Bloomberg said it will include India FAR bonds in a phased manner over a 10-month period with an initial weightage of 10%. The weight of India FAR bonds will be increased in increments of 10% of their full market value every month over the 10-month period ending October 2025, at which point they will be weighted at their full market value in the indices. Now, the inclusion will of course lead to billions of dollars of inflows into the government debt. I was reading some of the reports from media channels put out there, and they were projecting a figure of about $5 billion of inflows in just passive money. And this is on, by the way, on top of that 20 to 30 billion inflow that is expected to come in by the way of inclusion in the JP Morgan index, which the government bonds will get included in JP Morgan index in June of this year. They will also be included in a phased manner. And Amit, coming to you, of course it is a big positive for the rupee as well, this inclusion, but do you think that it would bring a greater scrutiny to our public finances? Because even though the government's focus has clearly been on reducing the fiscal deficit, as was indicated by this budget as well, it still remains on the higher side when compared to other index constituents.
Yeah, hi Suyesh. Yeah, I think after the JP Morgan inclusion last September, this was pretty much on the cards that this far bonds for the from the Bloomberg index will also happen. The quantum will be quite less. I think $5 billion to start with, and then a slight increase over the next 10 months or so. Whereas in the JP Morgan index, you'll have a 25 to $30 billion straight away, and then there will be active investors also investing. As far as the fiscal is concerned, I think government has been able to manage it quite well on the lower side, despite all the hiccups in the COVID period as well. So I don't expect re-rating, or rating upgrade to happen from the agencies sides, from all these rating agencies like Fitch, Moody, etc. Given that we are still giving out ATCR, giving out free food grains to ATCR people. So there will be always some sort of pressure on the fiscal. We still don't know how much the divestment will happen in the public sector units as well. So I think the fiscal may not improve, but it may not very disastrously put under pressure also. So I think there will be, given the growth dynamics of India, there will be decent inflows coming. But obviously this is the first time it's happening, so there will be lots of ifs and buts which we have to answer with time.
All right, and moving on, I mean, RBI has in the post-market hours yesterday ordered IIFL Finances to stop sanctioning and disbursing gold loans, citing, and I quote, material supervisory concerns observed in its gold loan portfolio. Now, what is the central bank alleging? RBI in a statement noted that violations were there in the maximum allowed loan to value ratio. Those were found, and that one, IIFL also Finance exceeded the permitted cash collections limit. Second, it has failed to adhere to the standard auction process, and thirdly, it has lacked transparency in the fees charged by the company. And as of the December quarter, IIFL's Finance's gold loan book that stood at about 24,692 crore, making up nearly 31% of its total loan portfolio. So it's quite evidently a big blow for the company, and that was also evident from the stock price movement today. The stock crashed 20% and was stuck in the lower circuit right from the word go. And Amit, coming to you, two questions here. Can you help us quantify the impact of this bank? I mean, a ballpark figure of what to expect as far as potential downside for the stock is concerned. And second, is IIFL's loss a boon for other gold loan financiers such as Muthoot and Manappuram?
See, we don't cover IIFL, but obviously I read the news and did some numbers initially. So it's in the short term, it's a major setback for IIFL. The gold loans are almost 32% of its AUM mix, and apart from that, they were doing a large proportion of co-lending also with few of the NBFCs in the gold loan segment. The good thing is, if I have to pick a silver lining, then these are process related lapses and not corporate governance related lapses. So the company can actually work with the regulator to rectify the observations in the gold loan portfolio. What usually happens is, the gold weighing process, or how you measure golds, that's a manual process. So there is always a difference between how you value the gold and gold loans, and how you put it as LTV, the value for that. So given that there is a little clarity right now on the duration for which this ban would remain, it is difficult to quantify the exact impact. Obviously, on the paper of it, given that it's a 32% AUM, that's also reflected in the stock price today. But the one positive thing is that RBI has allowed IIFL Finance to actually service the existing clients. There is no impact on that. So that usual collection and the recovery process will continue. And these observations were given to the company on 18 January, and we are sitting on 5th of March. So already, the company had almost like 45 days to go through the observations and start, carrying out inspections and start taking precautions on their operational measures. So I would still say that there would be some time before the ban is lifted. But it is also a possibility that these are not material supervisory concerns in the IFL's gold loan portfolio. Obviously, if there is a ban, then it would impact the companies which do the gold loan. So whether it is Manapuram or Muthoot Finance, or even something like a micro cap like a Capri Global also, who is very big on gold loans, they would benefit in the short term till the ban is lifted. But right now there is no clarity when the ban would be lifted. It could take anywhere between 3 to 6 months.
All right, and moving on, Rajiv Bajaj, the managing director of Bajaj Auto, recently said that he sees the fair value of Bajaj Auto stock at rupees 12,000 a share and at current market prices. This indicates a potential upside of over 40%. Now, the stock clearly has been one of the best performers. In fact, it has been the best performer in the Nifty basket over the last 1 year. It has given returns of about 125%, and it has benefited from industries move towards premiumization. But Amit, what do you think, or what do you make of management coming out and doling out price targets? Because when I read it, it reminded me of this quote from Nassim Nicholas Taleb's book, Fooled by Randomness, where he said we should be wary of predictions, especially coming from those with a stake in the outcome. So should we be wary, or is 12,000 still a fair price target for the book, for the stock, considering the industry is also seeing a shift?
No, I mean, if he thinks that 12,000 is a fair value, that's his opinion. But then why the buyback is being done at 10,000 and not for 12,000? So that is something to ponder about. My sense is that there have been changes in Bajaj Auto. Obviously the commodity prices came down. There were price hikes. There was a move towards premiumization. They are launching one CNG, a vehicle next quarter, which is almost like can be run at 50% cost. It's more environment friendly also. They are coming with a new version of Pulsar also. There are some headwinds in the exports market to Africa, Nigeria especially. But still, there is a very strong premiumization trend in the domestic business, and there is an increased focus on electrification. So I think stock, a lot of the positives are actually in the price. Obviously, the stock should sustain at current levels, given that there is a buyback at 10,000. But beyond that, it clearly depends on, how the export market sort of revives. Because again, the export market, have been a slowdown in the exports, especially for two-wheelers. The Nigerian currency, sort of goes through its own period of devaluation, etc. So I'm not a great fan of management's giving out price targets, but yeah, you have to take it with a pinch of salt.
But could there be some regulatory consequences? Could SEBI have problem with Mr. Bajaj putting out a price target?
No, I don't think so. I mean, in the past also, some of the managements have given out guidances, and then they have missed out of on those guidances, or they have beaten those guidances. So I don't think it should be a issue from a regulatory point of view.
Hmm.
But it's a opinion. You don't want to, we live in a very dynamic world, and you don't want to put out targets only to disappoint people in the end.
Fair enough. I mean, reminds me of the time when Elon Musk came out and said, Tesla stock, in fact, was too expensive. I mean, the stock did react negatively, and comments, management commentary coming out, because they are looking from inside out. They are familiar with the process of the company. So if management is putting out a price target, I mean, there is some questions and some eyebrows that are that perhaps are to be raised. But moving on, Tata Motors, now Tata Motors is looking to demerge its businesses. They are planning to list their commercial vehicle businesses as well as the passenger vehicle businesses as two separate entities. And I was reading some of these brokerage reports that have come out after this news was announced, and mixed reviews. I mean, Nuvama and Motilal don't see much upside for the stock from this demerger. According to them, the current valuations reflect the sum of part valuations for the stock, whereas other brokerages such as Morgan Stanley, they are optimistic about this value unlocking exercise. Where do you stand, sir?
Look, Tata Motors has almost like tripled in the past 3 years. Even if you ignore the COVID dip, which was below 100 rupees, then also from a pre-COVID level, the stock has tripled in the 3 years. So a lot of the positives are already in the price. As far as the demerger decision is concerned, it was a logical progression, given that both CV and PV, and inside PV, you have EV also, electric vehicle business, which is sort of yet to break even at the EBITDA level. So these are very different, business entities, and having them in one single entity meant that whenever there was a problem in the CV business, then also stock would go down. If there is a problem in JLR PV vertical, then also stock would have a lot of volatility. So now, given that the JLR has sort of turned around on a profitable growth path, in India the company is already ahead of the competition in electric cars, and they have sort of successfully realigned their portfolio towards utility vehicles, at least in the IC. As far as the again the EV business is concerned, they have already raised capital for that.
Hmm.
They plan to launch new EV models, and they actually expire almost like 50% of the volumes coming from EV by 2030. So for that, they would need more capital to have. And when you divide the company into two verticals, different verticals, removing the CV part, then it's much more easier to actually raise capital also for EV. And the people or the investors who want to participate only in the EV story,
Hmm.
they would have a direct, option of actually doing it. So I'm not sure, how the valuations would pan out of the PV entity alone, because the valuation exercise will be done over the next 12 to 15 months.
Hmm.
Um, but I think a lot of the positive things which has happened in the last sort of 12 months, so that is already in the price. Stock has rallied quite a lot.
Hmm.
Uh, so yeah, I mean, going forward, I think there could be a ceiling of sort of for the price to move.
Hmm.
And once the demerger is done 12, 15 months down the line, then we have to take a call whether to participate in the CV business or the PV business.
All right, ceiling could be around for Tata Motors. I mean, brokerages have shared mixed opinions about this potential demerger, what it would mean for the stock prices. But the street is clearly impressed. The stock has moved past 1,000 mark for the very first time. It rallied as much as 8% today, ended about 4% higher at record high levels. So clearly, the market is excited about the demerger. But Amit, thank you for joining us here on News9. Always great insights from you, sir.
Thank you, Sue. Thank you for having me.
And with that, it's a wrap in this edition of Last Take. Stay tuned with us as we'll be right back with Business Plus.
start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win. Life of a goalkeeper is something which has always intrigued me.
When you come into a stadium, this is the highest level of pressure.
When I set out to do something, I decide in my mind that failure is not an option.
What you feel very strongly about, those are the stories to tell.
I have a mind which is absolutely restless.
Mind and body are entangled sensations.
That brings me back to golf. It's an amazing game.
This is not a perfect game. You only learn from them.
If you have a formula to a success, then you can replicate it.
I feel this is my first step. I'm starting now.
Winner is first born in the mind. I think, therefore I am. We are all about our mind.
This and more. Streaming on News9 Plus. Subscribe and get free vouchers.